Welcome to the StockMiner.com studios here in the Black Hills of South Dakota. I'm your stockminer Brian Johnson, and a little catch-up video for you guys. Listen, we have been up, we have been down, but look at the screen in front of you. We're not really going anywhere. We are trapped in a big range, just a really large range of about 500 points, 12,950, 12,450. I'd even extend that maybe to be 12,400 and 13,000 if you wanted to. Just put 50 points on either side of that. The fact of the matter here, guys, is that we have had some pretty violent moves, both up and down, but things are staying pretty well contained in these two areas. When that happens, you have to be very careful with your trading because the market can turn. It tends to be a lot more volatile during these types of times, and it's very difficult for a swing trader to make any kind of money because we're up for a few days, down for a few days, up for a few days. Now, as I switch to the dailies, you'll see things haven't been too bad necessarily from a swing trading perspective, as we've been down about 6 days in a row now, but we're coming back into some support levels, and you've got to be very, very conscious of where those are at so you know where to take your trades. Here's your range. You're looking for something below here short and something above here long. Those are your most conservative trades. Now, I realize that this up here is about 400 points away. You can get aggressive somewhere here in the middle. That's just fine. Just know that the more conservative trades lie outside of these lines. This is where you want to be trading at. Give about 50 points actually both ways to kind of give it a just for safety's sake, just for extra confirmation's sake, if you will. But overall, this is the range we're looking at. Look, we've been stuck in it since the beginning of June. We got into this thing, and for a month we've been wandering sideways. On a 60-minute, it's very clear. On a daily, looks more like a move up and a pullback, a move up and a pullback. But in the grand scheme of things, it's all sideways. Okay. So we had this beautiful move, day after day after day of bearishness, this wild consolidation, then another nice bit of movement. Here you're seeing gradual days of downwards action with big wicks on the bottom, meaning that there's buying coming in at the end of the day or somewhere whenever in the day, and it's making its effect on things towards the end of day candles. So 1, 2, 3, 4, 5, 6 candles down in a row, breaking all the moving averages. Great. Now the bulls have their task in front of them. They've got to reclaim all of this. I would be surprised if it didn't come on some sort of news. Something major has to happen. I don't know. I really don't know how they're going to get out of this without some sort of, major something coming into the market itself. Absolutely what I'll be watching as we come into the end of the week. Now, even if we don't get anything tomorrow, looking for it early next week and looking for bounces here. See, we have the 200-day moving average flowing right in with this 450 support level. It's perfect right in through here. Be very careful in and around this area. That's why I like a little bit of leeway both up and down to kind of give yourself a little comfort room once the thing has actually pressed through. So if we move on, you'll see that the Nasdaq's doing the same thing. Big wide range right in through here. You're looking for down below 2,500 and really back above the 2,600, 2,630, 2,660 type areas. I have not seen the Nasdaq get aggressive here in a while. Apple's been helping. With the strength in Apple, you've seen the Nasdaq go up. But at the same time, when Apple doesn't have a good day, it absolutely drags everything else down with it, and down a lot faster than most other stuff. All right, so caught in this little range right here, these are your lines to be looking at for trades coming into the end of the week and into early next week. Look at the daily, and you can see this range right here. Notice how we hit this 25.25, pow, bounce right back up. Up here into the 26.50, 25.25 area, it's about 125 points that we're dealing with. It's that same wide range. We're stuck. It's been this way since we got here early June. Even remnants of May have left us in this trading range here, where apparently investors feel it's a pretty fair deal to be staying within this range, wandering around in this area. It's a little frustrating from a swing trader's perspective because it seems like just as you get in, you have to get out. However, some of these moves here, being as large as it is, that is a good 100 points up and down for the Nasdaq, makes for some okay profits, allows you to get in, stay in for a day or two, but then you better start watching and paying close attention with where your stops are at and how you're managing your positions, because we have seen lots of gaps in here as well. You wake up in the morning, you never know what you're going to get when you get back to your trading desk. Here's the drop to the bottom, hitting that lower area, just illustrating yet again this wide area we've been traveling in from a weekly perspective. Every week it's the same thing, little up, little down. Now we're back down again, hitting and holding well this 20-week moving average. This has worked like a charm. Any kind of approaches back to the upside, guess what? This is what you're focused on. You got to get this thing back up and above it for the bulls to have any kind of chance, any kind of semblance of making some sort of strong run. This will be the area to do it. SPX 60 minutes, same type of thing, bouncing off this area here, a little up, little down. Now you can start to see what we've been seeing. So it is a gradual slope so far to the upside. Little same thing here on the top, kind of a channel, which I'll illustrate on the daily. So it has been sideways, but it has been kind of more sideways to up. Point being, we're still stuck. Wide swath, 1310 and 1375, 65 points here, both high and low. Those are your more conservative areas to be watching as we push forward. Here's that nice looking channel. This can be illustrated on just about every one of the indices right now, as this seems to be where we're stuck. So you're looking for your trades. I would say down in here, back up in here. Don't get too wrapped up in the middle here. Just be careful. Take quick profits if that's the way you're going to play it. Then down below this area here, you're playing with the 200-day moving average. Some of them are already getting back to the 200-day moving average, or getting very, very close. We haven't seen that yet with the SPX, but if one does it, a lot of times the rest of the indices follow. That is your indice catch-up now from the last week or so. It's been a lot of up, a lot of down, gaps in the mornings, on and on. However, it's straight sideways. Just look at the charts. This has been illustrated well on the VIX as well. You can see the VIX slowly working its way back up, however, stuck very comfortably below the 20 mark, which is my more complacent level for the VIX. Things aren't out of hand yet. Bulls still think they've got a shot. Bears aren't really sure where it's going, so it stays in a more complacent level. Stuck right here in the middle at about 18, both on the daily, weekly. You can see what we're looking at. Couple of weeks. This will be, if we close in here tomorrow, 4th week of complacency, if you will, from the VIX. So not showing a whole lot of excitement or a whole lot of fear coming into the market quite yet. FAS in what is a very, very sexy looking falling wedge. This thing is just textbook from the standpoint of look. And I would say below 83, above 87, I think that makes it pretty clear there. These falling wedges are a bullish, that is a bullish pattern. So I would expect somewhere down the road we might see a break of this and then pushes back above this 87 mark, I think, are your best, most conservative entry here. Below 83, you bet. I think you could play that back to the, what's that? 82, which is the, let's see, 200-day moving average. So they're all kind of coinciding with one another. At this point, I'd be very cautious. Look, we had a bounce here, we had a bounce here, we had a bounce here. This blue line seems to be holding well. The only thing that breaks these is a very, very powerful move downwards. Maybe bad news or one of those. If you're an Elliott wave guy, like a 3 of 3 or something like that, that will break these. But as a general rule, they usually hold pretty nicely. Even if you sneak out of them one day, you sneak back into it the next. So watch this very closely. But this will be your lower level to be looking at for a target below 83, targeting that 82, then back above here into the 87 area and above. From a daily, it works the same way here, as we're trapped between the 20 and the 50, just kind of sitting here waiting for something to happen. I don't like this chart necessarily because of the gaps. I'm really more comfortable with the 60-minute, which I think is very clean, has a very nice look to it. However, you draw a couple lines here, and you can see that same channel forming as it is on like the SPX and everything else. Here's a nice look at the lower line here, then for FAZ, as you can see the 60-minute kind of working its way up here. You're looking for breaks below the 23 area, which is the 50-period moving average down here, lower level of support. So below 23 and above 2450. 2450 long and 23. The long will be a little bit more risky, but there you have it. If you want an opportunity, that would be the one to look at. From a daily, it's the same thing. Look at this. Big channel down, break and go. Big channel down, looks like a break maybe. Do we get the go as we saw over here? Time will tell. But curious to see that, isn't it? Kind of neat. Elliott Wavers call this a fractal. You get one big one over here and a tinier one later on. So that's exactly what we're seeing here, looking very, very clean from a trading perspective here. So watching this very closely. That brings us back to the beginning of the video, and that should catch you up on everything. All right, guys, there you have it. Straight sideways, lots of choppy action. This thing can go any direction. It's anybody's call. I'm actually watching the futures right now. It's later. It's about 10:20 Eastern time right now as I make this video, and the futures are moving. They're moving pretty hard right now. Must be some kind of news coming out. Not really sure. I guess we'll find out tomorrow into Friday's trading, and then I'll see you guys again next week. If you like these videos, you'll love the subscribers video. Listen, 28 bucks a month. It's $1 a day. It's well worth your time and effort to try it out for a month and see what you think, and see if it's worth keeping. I really think you'll enjoy it. A lot of really, really good information in there that you can use on an everyday basis for your entire week of trading. The mentoring is something else I do, and I love, love, love this program. If you want to do it full time, you're trying to make this work so you can earn a little bit of extra money on the side, the mentoring is where it's at. It's hard to compete in this market when you don't have the same education as everybody else. So you can only get so much online, and you can really only get so much from books. What you need is somebody to sit down with you, work with you, hold your hand, answer all your questions, and that's what the mentoring system does. It's a much better educational system. Imagine if you went to college and every class you had your own teacher for. And he was yours and only yours, and you could get a hold of him anytime you wanted to. And even after the course was over, you could go back to him and ask questions about stuff. That's what my mentoring course offers. If you're interested, send me an email and I'll send you more information on it. We'll see if there's a match for us. And hopefully we'll hear from you soon, and we'll see you next week. Bye.